Chantal. Welcome back. You're watching Stock Watcher with me, Zinati Guma, and join me to take your stock-related questions is Chantal Marx from FNB Wealth And Investments. We are pre-recording today's episode, but do continue to send your questions on email at stockwatch@bdtv.co.za or via SMS to 41392 or on X using the hashtag StockWatch. Thanks so much for joining us, Chantal. Of course, we have to start off with the big rally that we've been seeing on the JSE and also on the Rand. Has China just opened up a whole, just a whole theme of opportunity? And actually, where are you looking at this point?
Yes, so I think that we've already had some of the kind of local factors playing a role in the JSE. We have had the tailwind from the US cutting interest rates and the SARB following. And I think China was probably one of the missing links from our perspective, because firstly, it's very important from a global markets perspective, being the second largest economy in the world. Secondly, it's an important emerging market. So when China does well, and the expectation is that China does well, a rising tide lifts all ships, right?
Yes.
That is by extension quite positive for emerging markets. And then you have the fact that South Africa's economy is intrinsically linked with the Chinese economy. From a JSE perspective, we do have Naspers and Process benefiting from China. You've got Richemont with a massive exposure there as well. And then, of course, our mining companies, really very dependent on Chinese demand in order to drive growth in volumes as well as price increases for the metals that they produce. So with China doing well, it really just helps the JSE along quite nicely. And the JSE is already benefiting from those other things as well.
I mean, just talking about this runway of opportunity, would there be specific sectors or specific counters where you feel like there could be more runway, maybe more than others?
Yeah, so I mean, from a China perspective, I mentioned Naspers and Process, Richemont, and the miners. From a SA Inc. perspective, even though it might not be intrinsically linked to China, the improvement in sentiment around China will extend to emerging markets, and it will be positive for the domestic SA shares as well. I think the rally in the Rand, I didn't really touch on that in my previous answer, but the rally in the Rand will really help some of the importers in South Africa. So I think that you could see some benefit accruing, especially to the discretionary retailers. So the clothing retailers, the furniture retailers, and the like.
Well, actually, talking about the resources, I am seeing that today the PGM miners have actually given up their gains, and there's actually a question on Implats, which at this point is down almost 4%. So on Implats, why is the share price lagging the platinum price by a large margin?
Yes, so Implats will be more impacted by low platinum prices than the rest of the guys. And that's just because their debt is quite high. Their debt is quite high because they purchased RB Plats probably around about a year ago now. So they also have the operational complications that an integration like that also brings to light. So Implats will be more heavily impacted. That means when there's uncertainty around the sector, Implats will lag. Once that uncertainty resolves itself in a more meaningful way, Implats will likely rally stronger than the rest of the platinum sector because it has that operational leverage as well as the leverage on its balance sheet. But it does tell you that the recent rally that we've seen in those counters are still it's a careful rally. It's a cautious rally. It's not one where all investors are convinced that we've seen the bottom and that these companies can grow going forward.
Would Sibanye also be in the same boat as Implats, where it's also lagging the platinum price, but in good times it could also have more of a boost?
Yes, absolutely. So Sibanye has more marginal mines, which means that when the price is lower, their free cash flow falls substantially. But once that turns around, it goes quite well for them. They're also quite highly leveraged, so exposed to the same issues that Implats are.
All right. Well, just sticking to resources, we do have Sasol. It actually went down by quite a lot. When was it? Yesterday,
Sure.
I think more than more than 7%. It is up slightly by about 1% today. Quite a few questions on Sasol. Is Sasol a buy? And then also, please, what is happening with the Sasol share price? What's driving the share price downwards, and how long? I think let's start off with actually what was responsible for the pressure that we saw on Sasol recently.
So, I mean, Sasol's been under pressure for quite some time. They've had operational issues that's led to issues on profitability. Chemical prices have been very low, so they've taken big write-downs on their chemical assets, particularly in the US more recently. And I think that there are some question marks around capital allocation, even though there's a completely new management team. Added to that, there's a completely new management team, so they still need to be tested and they need to kind of right the ship going forward. More recently, so I would say over the last week or two, Sasol has been negatively impacted by lower oil prices and a stronger rand. Sasol is highly geared to the oil price and the rand. So when the rand is weak and oil prices are high, Sasol tends to perform well. And then, of course, the flip side is also true. So many times you'll see Sasol underperforming when you see, for example, a rally in the SA Inc. shares.
Yes.
But then, of course, the opposite is also true, which makes it a really great diversifier in a portfolio. I would caution, though, that even though very few fair value models will now say that Sasol is a sell,
yes,
most will say it is extremely undervalued. Momentum is a very powerful force, and momentum is still very much downward when it comes to Sasol. So I would think about entering a Sasol position once I start seeing that there is some decent support at the downside, the share price is kind of consolidated at a particular level and has shown signs of wanting to break higher. For now, I'm staying away.
Okay, because if you go in now, you could be catching a falling knife.
Exactly.
All right.
Yeah. I'd rather let the knife bounce on the floor and kind of catch it mid-air.
I hear you. All right, well, let's go into Cashbuild. Your opinion on Cashbuild as a buy. You have had it as a buy. Are you still of the same thinking?
Yes, so I had it as a stock pick on the show about a month ago, and it has gone absolutely nowhere. It has not done what I thought it was going to do. But then, of course, I'm a long-term investor, and that's the way that I look at these things. And I still think that Cashbuild, from a long-term investment perspective, offers some really decent upside. Even if you're just looking at the next year or two, I think there are some very specific tailwinds for the South African consumer and for small businesses over the next 12 to 18 months that will really help lift demand for Cashbuild's products. That being lower interest rates, lower inflation, higher consumable disposable income as a result. You've got a steady political situation. There does seem to be a growth mindset kind of taking place in South Africa at the moment. Consumer confidence is picking up. All of these things are positive for a company like Cashbuild, and I think that they'll do very well over the next few years. The valuation also, I think, is still compelling, even though we have seen this big rally in SA Inc. shares. I think that Cashbuild has probably lagged that somewhat. But yeah, it's more a mid to late cycle play. So I think it will do what it's supposed to do. It might not be right now, though.
It's quite interesting that you choose Cashbuild, because when we look at home improvement building, we tend to look at both Cashbuild and Italtal, and of course the macroeconomic high tide that we can expect from here on out will of course also lift Italtal.
Yes.
In what lens would you be looking at Italtal?
So, I mean, I like the Italtal story as well. I think what complicates matters for Italtal is that they're also a manufacturer,
Yes.
and that does add an element of risk. That said, they're vertically integrated, right? So they should also benefit quite nicely, unless they have disruptions in manufacturing. Of course, low load shedding will help them on the manufacturing side as well. I think the only reason I prefer Cashbuild over Italtal is just Cashbuild has a cheaper valuation than Italtal, but Italtal is a high quality business, and it will also benefit from the same things that Cashbuild will benefit from.
Ah, all right. Well, let's go into Metrofile. This is also one that has interested investors of late. The question goes, well, the CFO just bought over 300,000 rand of Metrofile shares on the open market. I think that was a few days ago, last week. Wondering if some government tender awards are coming Metrofile's way, and if its future is not as bleak as many in the market assume. What would change Metrofile's fortunes?
Yes, so I mean, I think that the story with Metrofile over the last decade or so has been what is next for Metrofile, because they were basically providing document storage solutions, but now most documents are in the cloud. So really the important thing for Metrofile is to pivot away from physical document storage into the cloud space, which I believe is something that they are wanting to do. Now it just depends on whether or not they get the business to actually run these big projects. So I think that the CFO buying, he won't be able to buy on inside information. So there'll be a lot of question marks if we suddenly see a big tender coming through after the CFO has purchased that much stock. But certainly I think that from a strategic perspective, perhaps it signals that management is confident in the long-term plans that it's put in place, and they think that the share is undervalued at the moment. I've seen that after the recent share price pop, its historic PE is now close to about 11, 12 times. So for me, for a company like that, it doesn't seem too compelling. But I think that if they can get that new strategy correct and they can actually translate into meaningful cash flows, they could do quite well.
All right. Chantal, I actually want to check in with you on the insurers. A few have come out with, well, quite a lot of them actually have come out with results. Recently, well, this month. We started off with Sanlam at the beginning of the month, and then Old Mutual yesterday, and Momentum today. Are there specific trends that you are seeing there? Maybe any signs of encouragement, maybe some pressures that you are seeing there?
So it has been quite mixed. So some of the insurers showing some pretty decent growth in kind of new annuity sales, but it's difficult to say that there's one big trend between all of them, because they're all so diversified. And I think that's why you've seen these kind of these very steady, solid prints from these companies, despite the fact that we've gone through a period of relative turmoil from a macroeconomic perspective. One thing that I'm a little bit concerned about is that new business margins have been squeezed a little bit. But I do think that is normal in this macroeconomic environment, and hopefully we'll start seeing an improvement in that over the next few months and even the next year. Another interesting thing that stood out to me is that a lot of guys are looking at different business ventures, bolt-on acquisitions, entering into new spaces, and that tells me that these companies still have a growth mindset, and they're still trying to think about how they can add additional businesses to their stable to complement their existing businesses and perhaps future-proof it even more.
So because they're not sitting on their hands, and their performances do seem resilient because of their diversification, would you say that there is opportunity in that sector?
So I think when you're looking at a company like Sanlam, for example, and Momentum, I mean, these are companies that you can put in your portfolio as kind of longer term core portfolio holdings. I'm not too concerned about the specific levels at which those companies are purchased either, because I think that growth will come through over time. The big opportunity, I think, is in Old Mutual. Old Mutual is extremely cheap, but it has also underperformed. So I think that is the company where the opportunity is there, but they need to make sure that their strategy actually helps them grow into or helps their share price grow into their underlying valuation. And then Discovery is another interesting one. I think that the stock was unfairly beaten down after the NHI was written into law, but we have seen it come back since, and they're doing some really interesting thing on the international side, and their bank is also doing much better than expected. Discovery, I think, is one that I would trade. Old Mutual would be a value pick, and then Sanlam and Momentum, I can just comfortably sleep at night holding those stocks.
All right. I think South Africans are sleeping better at night now that the rand is hovering above 17 rand against the dollar. There's a question here. Is this the right time to take money overseas?
Well, yeah, I mean, I think that when the rand starts strengthening, it can strengthen quite hard. Yeah. But I think that if you look at the rand right now, it's probably around about fair value levels if you consider the current expected economic growth trajectory. But because we have all of these tailwinds specific to South Africa at the moment, and confidence is improving quite a bit, we've got structural reforms coming through, there is a chance that our economic growth rate exceeds current expectations over the next year or two, and then you will see the rand strengthening further. But I think based on what we can see right now, 17 is a solid point to take money offshore. Perhaps take it in stages, especially because momentum is quite positive for the rand right now. But I think that over the very, very long term, the rand will again depreciate to 18, 19, 20 because our interest rates and our inflation is higher than that of the US and that of the developed world. You will have a structurally depreciating currency over time.
Okay, very, very interesting there. Chantal, let's get to your stock pick. What are you hanging your hat on today?
So I love SA Inc. at the moment. I've picked a few SA Inc. shares over the last few months. In that time, we have seen some interest coming through in the SA Inc. space and onto the JSE generally. And it's made me think that maybe I want to own the JSE, and not just the JSE All Share Index. I want to actually own the company, the JSE. The main reasons are that we are seeing heightened trading volumes on the JSE currently. We've had our local fund managers getting involved in the local equity market again. We still think that there is scope for foreigners to enter our equity market again, and those volumes will drive revenue growth for the JSE. I also think that because of the environment improving, we could see an increase in primary listings, so new listings on the JSE. That will also help them from a fee income perspective. And even if none of that actually happens, the JSE offers a nice 6-7% forward dividend yield. They're cash flush, and they have different kind of diversification strategies going on as well. So JSE, not the All Share Index, although you can probably buy that too, but JSE, the group.
Cool. Thank you so much for your time and for your analysis there, Chantal. That is all for tonight's Stock Watcher. Thanks to my guest, Chantal Marx from FNB Wealth and Investments. Up next to the close, stay tuned.